Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, the bulls went on an absolute roar of a rally today. And that, of course, is because we removed one of the big uncertainty catalysts in the market. If you just take a look at the VIX, guys, I'll let you guys know why, regardless of the outcome of the election, why uncertainty is such a big component of the market. And when you remove the uncertainty, like a 21% move down in the VIX today, usually it does alleviate a lot of built up pressure, a lot of timidness in the markets, and it allows equities to run. Now, of course, because of the results of the election, we do have certain thematic trades, depending on the candidate, that are running more than others. And we're going to talk about that in today's video. As a matter of fact, in today's video, we're going to go through a lot of different things. Number one, we're going to revisit the post S&P performance after a presidential election. What are usually the trends that we see emerging in terms of market strength or market weakness in the 10 and 20 following days after the election? And also review the seasonality for the months of November and December and get a glimpse into what might be awaiting us in the next 2 months worth of trade as we wrap up the end of the year. Number two, I have a few earnings prepared for you guys as well. We are going to be covering Celcius Holdings, ARM, and Elf Beauty. Now, I know there's a ton more, guys. There's NVO, there's Qualcomm, there's Mercado Libre, which you can't see because my big head's in the way, all the way down here. All of those are very valid to analyze as well. I hope to cover them more on the Friday session, but for today, we'll do Celcius, ARM, and Qualcomm. Tomorrow, we'll probably be looking at Square, the Trade Desk, and possibly either Fortinet or Airbnb. A ton of companies there as well, but once again, we'll probably have to do a couple of them either on the Friday session or on the next Monday. There's just too many of them to cover, right? So I chose the ones that had the biggest moves in essence out of all of them, right? So hopefully that makes sense. After that, we're going to get into our major technical analysis rundown, see how we are shaping up after this monster rally in the indexes, and then, of course, in our big tech names, and see, even though the markets are at the all-time highs, are there still some good deals in the market? And quick little hint, of course there are. So of course, there's a lot to cover in today's video, guys. Let's jump right into the action. And before we do, I want to issue a message in terms of the results of the election that have pretty much transpired over the course of the day today, right? So, as you well may know, on the channel, I tend to keep things as neutral as possible. I'm from Canada, guys. I don't really have any skin in the game in terms of the US election, but I do love to invest in US-based companies almost entirely. So of course, I watch these results very, very closely. Now, in terms of how you are possibly feeling right now, guys, this is a very important message, right? Whether you are euphoric because the elections went in your desired direction, or whether you have anxiety and are a bit sad because they did not, guys, all of those are emotions, and emotional baggage, especially when trading and investing, guys, is not the best thing to have, right? So if you're feeling either too euphoric or if you're feeling too anxious, it's possibly best to just maybe take a day off, take a breather, and come back to the markets with a very clear, focused mind. We need to be locked in from this time forward, guys, because I do believe there's going to be some phenomenal opportunities in the markets over the next 2-3 months of time. So regardless of how you're feeling right now, it is perfectly normal to be having those emotions. Trust me, when I was starting off my journey, I would get overly emotional for certain things and certain other things as well. But when we're trading and investing, we want to do our best to remove those from our analysis, right? If you feel yourself getting overly emotional towards one direction or the other, either way too euphoric, right? Or a little bit too anxious that it's clouding your decision process, that's when we need to take a step back, take a little break, and come back to the markets locked in, focused, and ready to rock and roll, and ready to smash those gains for 2024, guys. So now let's jump into today's video, of course. So the S&P up a whopping 2.5%, the QQQ's up another whopping 2.72%. And I hope you guys got your sunglasses on because it's a little bit bright on this heat map, right? Extreme green in the markets, big tech performing really well, except for Apple and Meta, which were down. Everything else, monster rallies, guys. Semiconductors going on a tear. Microsoft finally coming live. Google coming live as well. Our financials index was doing fantastic. That was part of one of the thematic Trump trades that I was talking about in yesterday's video. Healthcare, a little bit down. Eli Lilly down because of the NVO earnings. And we did have UNH, which was up. The bottom half of the market, though, guys, very mixed. Your two most interest rate sensitive sectors, which are real estate and utilities, obviously they came down because of the fact that yields went on an absolute rocket ship last night and even into today. Just basically speculation about the Trump presidency potentially resulting in stickier than expected inflation. So that's one reason that these two sectors are down. In terms of the one-day relative, you will see, guys, what a very beautiful day it was in the markets. A lot of broad market performance, except for utilities, consumer defensives, and real estate. The defensive trade, very, very simply, guys, is people are just rotating from value defensive into the boom stocks, right? So that's what you have to focus on in terms of that trade right there. Where do we stand on the 1 week relative? Well, now most of our major sectors, guys, are indeed in the green. Only trailing behind are real estate, utilities, defensives, and healthcare, a little bit lagging behind. And those are all of your more defensive and value-oriented sectors that performed really, really well when we had some worries about going into a recession back in last August, September, even early October, right? These sectors were performing decently, and now they're kind of pivoting back to growth mode, back to tech. So we got to keep a close eye on this rotation. And as per usual, guys, our job is simply to follow the money, right? So before we get into more technical analysis, let's jump into a few of the expectations in terms of what we can expect the S&P 500 to do after the presidential election has been declared. Well, here's your seasonal map. As you can see, usually, well, my big head's in the way again. So let me just move myself over. September and October were supposed to be seasonally negative, but they were actually quite good for the markets, leading us into November. November, usually a 58% probability of being an up month. We're already off to a great start. And the month of December has the highest odds out of the entire year of ending green. So I do believe that the month of November and December coming up, guys, should be fairly good months for the market. We're through all of our major earnings catalysts. Profits at companies have been good. There haven't been any massive layoff rumors from these companies as well, and EPS has largely been maintained. So no recessionary views from our major companies. We also got all of the massive amounts of data over the past 2 weeks, which shows that the economy and the jobs market by large are okay, and inflation also is still at a very manageable level. Now, where do we stand after the election, guys? Well, here you go. Here's the market days after the election, 20 and 40 days. And as you can see, other than the green line here, which is 2008, keep in mind the economy was already into a recession leading into that election, and the year 2000, which was pretty much leading into the dot-com bubble. Every single other one since 1984, you have pretty much had positive performance, at least in the next following 20 to 40 days. So leading into November and December. So the bias definitely is bullish for some continuation to the upside. And in terms of the uptrends, we are maintaining the uptrends as well. Before we get into the earnings, we're going to visit very, very briefly the niche narrative trades depending on the candidate. And you will see I was pretty spot on with these in last night's analysis. So Trump, they had the crypto trade as well. So Trump obviously was the most vocal proponent of crypto. Now, obviously in his first term, about at this point, 6, 7, 8 years ago, Trump was fairly against crypto, right? He wasn't really saying anything positive against it. So he has changed his tone, which is what many politicians do. Obviously, you can argue that it's to appeal to a certain demographic or not, but he has made certain promises. And if Trump does do one thing, is that when he acquires a large fan base around something, usually he does do a few things to appeal to that fan base, right? So crypto trade really coming alive for Trump. Financials as well. This was a very simple one just because of the lower corporate tax rate. Financials did absolutely amazing today, guys. The XLF index having its best day in years and years and years, up 6%. You go through a few of these names and the gains were absolutely massive, right? The biggest winner, of course, was JP Morgan, right? JP Morgan up 11.5%. Not even on an earnings day. So financials was definitely the biggest winner of our major sectors on the day. Look at all these gains, guys. Wells Fargo, Bank of America, all up 8 to 10%. Even Berkshire getting a lot of love here, about up 5%. They've been kind of pulled back a little bit, right? And oil, of course. Now, oil wasn't doing fantastic today, but as you can see, the XLE energy index was up about 3.76%. And a lot of individual oil players were significantly higher, as you can see right here, right? A lot of them. Look at the oil and gas, right? XOM, Chevron, putting in some decent gains down there. And the rest of the index, I'll move myself over once again. The rest of the index too, look at all these gains. Very nice green across the board. So we're not going to go through each one, but decent performance by energy just because Trump has been obviously very vocal about the oil trade and being energy independent. Now, in terms of the Harris trade, we were saying that if Harris were to win the election, these would be popular. So it stands to argue if Harris loses the election, well, these will have a significant pullback. And that's exactly what happened today. For the China trade, KWEB, just the ETF, Chinese technology ETF, it was down 2%. A few names were down multiple percentage points on the morning, Pinduoduo, Alibaba, Baidu, things like that, but they have recovered slightly intraday. Of course, that has to do with tariffs, right? Now, Harris, also the renewable energy trade. Well, if I go through my options list right here, you'll see that some of the largest losers of the day are companies of the solar niche, Enphase and First Solar, just to name a few. So renewable energy trade taking a little bit of a hit. I do believe it represents a decent buying opportunity, but I'm going to be a fairly bit patient on that. And healthcare, right? We know that the Harris campaign was a large proponent of expanding the Medicaid and Medicare services, giving more to people in the form of medical insurance. So some of those companies, as you can see, guys, healthcare was very, very, very mixed today. The best one, actually, funny enough, was actually in the healthcare plans. So kind of bucking the trend. What kind of came down is the drug manufacturers and big pharma. But for some insurance, the insurance plays really came alive despite this being a trade that was more associated with the Harris campaign. So we were pretty on point with some of our narrative and niche predictions. So we'll keep a close eye as to the longevity of these trades, whether they're going to be only just valid for the week or whether or not they have some real legs onto them. For the most part, a few of these sectors, especially crypto and financial, we've broken a few key levels to the upside. We do have the weekly uptrends as well, so I would not be surprised if we do get at least a few more weeks of follow through. And for these trades, we're going to be closely monitoring the bottoming out process of these. When can we recapture the daily uptrends, right? So I'm not going to be inching into them just yet. I want to see recaptures of the daily uptrends and more bullish momentum into them first. For now, I'll be focusing on the ones that are already trending in the right direction for us, right? Rather than trying to pick the lower reversal points for these down here. So those are the thematic trades, and just a quick little recap. Before we get into more technical analysis though, guys, let us jump into some of our company earnings. And we're going to go through these a little bit quickly. Now, in terms of the earnings, we're going to start off with, which one do I have first? So we have Celcius Holdings first. So Celcius Holdings, now the story has been one of growth that's kind of been tapering off. We know the consumer has been very picky about their spending. So now was CLH's show me quarter, right? Show me that the markets are wrong and show me that you guys are still growing at decent rates. Unfortunately, Celcius Holdings could not do that today, guys. Revenue was down significantly and they did miss on EPS. The bottom line profits were essentially eroded by the company's promotional efforts to stimulate demand once again. They spent a ton of money on promotions. They spent a ton of money on marketing this quarter, and it really eroded all of their profit margins as a whole. And it wasn't even enough to beat the revenue estimates. So double miss here, and the guidance for the company was not that great either. The company still was down about 5.33% on the day, so the company still has not found its local bottom. Let's get into a few of these trade elements, shall we? So moving into CELH, energy drink maker Celcius misses on Q3 earnings as supply chain optimization weighs on margins. Let's move into it. Quarterly sales of 265, down 31% year over year, missed the consensus of 267. So not only did they miss consensus, but they were down year over year. Definitely not the best when you're looking at a growth stock to have declining year over year earnings. We know that it's because of the cyclical nature of the business, ebbs and flows with the general health of the consumer, right? But still not the best look. Gross profit decreased by 37%, and the gross profit margin decreased by 4.4% as well. The decrease in gross profits was due to promotional allowances, incentives, and other billbacks as a percentage of gross revenue. Pronounced supply chain optimization by our largest distributor, Pepsi, which we believe has largely stabilized, had an outsized and adverse impact on our operating results during an otherwise solid quarter. So we know that Pepsi pulled back on their shelving display sizes for Celcius Holdings over the course of the quarter. Now, Pepsi does this because they have the distribution deal, right? And Pepsi tries its best to optimize the products that are front and center and the shelf space, depending on what sells the best at the current time. So unfortunately, Celcius kind of took a back seat in terms of positioning from Pepsi. Now, moving on further, sales to Costco wholesale in the third quarter increased 15%. That was pretty good. It offset some weaker than expected sales at Sam's Clubs and BJ's. But between you and I would rather have my merchandise in Costco. Celcius sales to Amazon.com increased 21% year over year to approximately $27 million for the quarter. 12.3% of Celcius's total US sales to Pepsi in the third quarter was to the food service channel. I will remind you that this is the best-selling energy drink on Amazon at this point now for about the past 3-4 quarters running. So nice to see that they're still expanding sales there, besting companies like Monster and Red Bull. Now, cash and cash equivalents ending was $903 million. That is very good, guys. This company has never had a problem with debt. They have a very low employee count. They're very good at cost control. And as you can see down here, guys, they have no debt to speak of. So this cash pile will get raised over $900 million, a very sound financial position for this company. So our strong balance sheet enabled us to acquire a longtime Celcius co-packer, Big Beverages, which we believe will unlock innovation and other supply chain efficiencies. So they are still building behind the scenes, guys. I wouldn't say that it's a wraps for Celcius just yet. I still do like the company, but we have to realize that this one, as I said, ebbs and flows with the health of the consumer. Let's move into a few of the earnings slides right here. And I'll just bring some to the highlight, right? So here is your US energy drink market towards the total beverage market. Now, energy market is in orange right here. As you can see, they've been outpacing the growth of the beverage market as a whole, but 2024 has been a rough year for everybody. So it's not just specific to Celcius, it's really specific to everybody and the overall trend in the industry. Monster Beverage has been saying the same thing. And if we look back to our Pepsi and Coca-Cola earnings that we covered just a few short weeks ago, they were saying the same things as well. Now, in terms of retail sales across multiple channels, you will see here that Celcius retail sales have been going up, but you can see the problem here is that we're flatlining versus 2023. Not the best, of course. Celcius's contribution to the category growth has been increasing, so they're becoming a larger player in the space as a whole. Year-over-year volume growth in the top energy brands. Here you have a bunch of energy brands at the bottom. So Celcius is in orange. They've been besting the competition now for about the past 2-3 years running. Red Bull has been declining this year, as you can see. Monster has been declining as well. Alani has been up and Rockstar Energy has been up. So nice to see that Celcius, even though the rest of the industry is lower in terms of volume growth for 2024, at least Celcius Holdings is still positive. So they're making the best of an unfavorable trend in the markets right now. They're ongoing with their global expansion to places like Australia, France, and the UK, and Canada as well. So nice to see that. Now, they've also acquired, as we were just talking about, the Big Beverages, which is very good in terms of bottling, in terms of production efficiency. So nice little transaction for them. They bought them for a cool $75 million. I showed you guys they have more than enough money to do that in terms of how much money they have on the balance sheet, right? This is the problem though, guys. 31% negative year-over-year revenue. As we just saw in slides above, it's not a Celcius problem. It's an overall industry problem, but still, it's not going to help when this company is labeled as a high-growth, fast-growth company, and they're not growing year-over-year. So that's why this stock has been crushed so much and so severely. It's just because the growth just isn't there anymore. Will it come back? Most likely, but we may have to wait a few quarters still for those things, right? Another last slide that I'll show you guys is the percentage of convenience store and dollar store sales in the last 13 periods. Now, this is the year-to-date change versus the yearly average. Once again, Celcius is outperforming every single other one of its competitors. So if you are invested in this one, even though the overall industry is down, at least you can kind of find comfort in the fact that this company has the best metrics in a somewhat declining cyclical industry right now, okay? So that's pretty much everything for Celcius Holdings that I really wanted to cover for you guys. International sales has been doing good, but dropping quarter over quarter. That's perfectly natural. We've explained that. And there's your gross profit completely being eroded right now, unfortunately, by those promotional activities and marketing activities. Completely normal, guys. I mean, the company has to do something to keep their market leader status in their category. and to continue trying to stimulate demand as best as possible. It's just unfortunate that now their net margins, although they were good, their net margins for this quarter will be very, very, very low, guys. Very low. They're going to get cut drastically. So bucking a trend of being decently net margin profitable, at this point this quarter, they were only net margin profitable by about 2-3%. So that's unfortunate for the company as a whole. Now, in terms of where we stand, guys, well, the outlook for the company still looks quite bright in the future. Let's have a look at some of the forecasts. You'll see that EPS will be growing for the next 4 years. It's just 2024 is going to be a little bit flat, but you know, the guidance from the industry and the total addressable market should be going up for the next 4 years. And also the revenue ramp should be continuously increasing. The best benefits, of course, are going to come later on in the cycle, probably the end of 2025 into 2026 and 2027. So where does that leave us, guys, in terms of the valuation? Now that we've been crushed from the tops here, how much are we down? Literally probably like 70%, right? Exactly 70% down from the all-time highs. In terms of the valuation at $30, even though we're crushed 70%, is the company cheap? Well, not so much, guys. The 2024 forward PE is about a 39.4. They're growing revenue and EPS at very solid numbers, but it's just not enough. The PEG ratio right now stands at about 1.31. You divide your PE by the EPS growth rate, and you can see it's 1.31. It's not the best in the game, guys. There's several other companies that have better PEG ratios. This is what's fun about the PEG ratio, is it allows us to compare tons of different companies in many different industries. And as you can see, we did the analysis on Google after their earnings at 180. They literally have the exact same growth multiple as Celcius Beverage, right? So it's all about conviction, guys. Would you start a $20,000 position in Celcius Holdings when they have the same fundamental valuation as Google, and you know that Google does not have the cyclical nature of this business? Well, it's a fairly easy bet in my humble opinion. However, that being said, guys, I wouldn't rule them out just yet. I do believe that this area is a very decent area to be building a position in Celcius Holdings, just due to their possible expansion as a whole. The market cap right now is about $7 billion. In my humble opinion, I think that a $14 billion valuation for this company in terms of their future growth over the next 3-4 years is fair. And that would put them about $60. It's just, I'm not sure whether or not we're going to get there very quickly, or whether or not we're going to continue teetering around the lows here with the rest of the consumer discretionary segment until that whole segment comes alive again. And that's probably when you're going to see the gains in Celcius Holdings. I think it's going to be option number 2, guys. I do not think this one will recover before the entire consumer discretionary trade recovers. And at that point, this company will probably be one of the fastest moving companies in the segment. So as of right now, decent location in my opinion. I'll be continuing to play some short puts and wheeling some shares down here. But if it's a longer term investment for you, I wouldn't say there's any major red flags to the long term outlook of the company. It's just all of this has been the cyclical nature of the business and consumers pulling back on discretionary spending. So hopefully that makes sense. That's the analysis for Celcius Holdings. Now let's get into earnings number 2, which is going to be e.l.f. Beauty. So e.l.f. Beauty coming in very nicely after the close, guys. 6.5% in the after hours. And this was another one, guys, where we've kind of been on the rocks, right? Consumer discretionary stock, but then again, we know that they have very cheap and very viral products. So we know that their consumers are not necessarily victims of the consumer discretionary spending crush. e.l.f. Beauty caters to, I would say, the cheaper styles of makeup, right? They're not like an Estee Lauder where they charge premium prices like $40 for some lip gloss or something like that, right? Their prices are extremely, extremely affordable. So if anything, people would be pivoting away from companies like Estee Lauder and moving towards companies like e.l.f. Beauty, where you can get similar quality for a very attractive price. So the whole focus on this company was 2 things. Were they going to be disrupted by the consumer discretionary spending crush? The CEO said no. He said no last quarter as well, but he reinforced it this quarter. The demand is not slowing down because of the macroeconomic environment right now. And number 2 is, since the company sources a lot of its products from China and a lot of their suppliers are in Asia, would they stand to be affected in the event of a Trump presidency? And once again, we had the CEO coming on today saying no, tariffs will not affect their business model in the slightest. So we got confirmation on the 2 biggest worries that we've had for this company over the last quarter. And now those worries have kind of been alleviated. So up 6.81%. Very nice showing for e.l.f. Beauty. Double beat and a raise on guidance. Beat on EPS, guys. They smashed it. Look at this bottom line. 81% beat on EPS and a nice little beat on revenue by 4%. Let's jump into the article, shall we? So e.l.f. shares soar as cosmetics retailer raises guidance after posting a 40% sales gain. Fantastic numbers from e.l.f. Beauty. It now expects sales to be between 1.3 and 1.34 during fiscal 2025, ahead of the analyst consensus of 1.3. So they reiterated very strong guidance for 2025 as well. That's what we wanted to see. Great quarter this quarter and perfect guidance moving forward. So I think a lot of the worries around this brand should be alleviated, and I would not be surprised if they start bidding this stock up again. Sales rose to $301 million, up 40% from just a year earlier. The retailer is expecting adjusted earnings to be between 347 to 353, so a midpoint of about 350. The prior outlook was 336 to 341. So not only did they raise their expected revenue guidance, but they also raised the bottom line EPS guidance too. The best of both worlds, in my opinion. The cosmetics company has been on a tear over the past couple of years, thanks to its viral marketing and its prowess in winning over young shoppers with its value versions of prestige favorites. So this one, guys, is a very, very solid business model. I've said it once, I'll say it again. I prefer e.l.f. Beauty as my cosmetics pick. In relation to other retailers such as Ulta Beauty. I mean, Ulta Beauty is not a makeup manufacturer. It's just the store where they have all different types of brands within the store. But then again, Ulta Beauty still has to pay for the brick and mortar stores, right? On the other side of things, you have companies like Estee Lauder, which also have a bunch of retail locations, but are not very price friendly in such a tight macroeconomic environment right now. So e.l.f. Beauty has the best business model. They have low overhead costs, they have cheap products, and they do most of their marketing on social media and online, targeting the younger generation demographic, and they've been absolutely crushing it with that business model. Now, we're seeing multi-generational appeal on e.l.f. Not only are we the #1 brand amongst Gen Z by a pretty wide margin, but we're also the most purchased brands among Gen Alpha and millennials. We're picking up customers in pretty much every age and income cohort, which is great to see. And I think just talks to the strength of our strategy and the quality of our products, said the CEO. CEO has also said that success had led both Target and Walgreens to plan to expand the shelf space they allot for the retailer starting in the spring. Walmart did this just a quarter ago. Now, moving on further, our ability to engineer prestige quality at these extraordinary prices has been the real driver, but most of our margin progress over the years has been through our innovation mix. Amin said that exposure to markets outside of the US will help soften the blow from any tariff hikes that could come under President-elect Donald Trump. So there it is, guys. They're pretty much alleviating all of the concerns. They are growing every single income cohort and every single demographic of consumer. They are also expanding their product lines. They are continuing on moving forward with their viral marketing strategy, and they should not be affected too much by tariffs. So all of the worries have now been alleviated from e.l.f. Beauty. Let's take a look here in terms of the SG&A. So we had a slight little, this is the one main thing that I could find from their earnings, guys, is a slight increase in SG&A expenses. So this is pretty much your operating expenses, right? Because their gross margins have been pretty good. Gross margins expanded. That's just pretty much revenue minus cost of production, cost of goods sold. But here is your other miscellaneous expenses, right? The operating expenses of the business. It increased a little bit because of increased marketing, digital spend, compensation and benefits, and operation costs. A lot of that had to do with marketing and digital spend, guys. Completely normal, right? In this environment where other makeup and beauty retailers are struggling, e.l.f. is doubling down and putting their products in the face of more people in hopes of winning them over for the long term, taking customers from L'Oreal, taking customers from Estee Lauder, taking customers from going shopping physically in physical locations such as Ulta Beauty and shopping online on e.l.f., right? So, I mean, very, very aggressive viral marketing strategy, and it seems to be working. Adjusted net income was pretty good too at about 15% net margins. e.l.f. has really not had a problem with net margins over the last few quarters. You can see here that, 15% is roughly in line with their best quarters just about a year ago at this point. It is a significant increase over the last 2 quarters though. So nice to see them improve on their gross margins and on the bottom line net margins as well. So all in all, a very nice quarter, guys. I would love to show you guys a presentation from ELF. Usually they have an earnings presentation with some slides and stuff like that. But unfortunately, this today, they don't really have the, when I was filming the video, they didn't release it. So let me see if we can find something quick in the ELF Beauty earnings guide right now in terms of some pretty charts, some pretty graphs, stuff like that. We'll see. Usually they have like 1,000 slides. So let's just move through this quickly. All right, net sales, market share is now up about 2%, which is very, very good. Here's your quarterly revenue. So there you go, 23 consecutive quarters of net sales and market share growth. Fantastic, right? So this has been a question. Are they going to keep growing aggressively? They will still keep growing aggressively, not at these rates that we had before, but they will still be growing very, very, very well right there. So I love to see that slide. International penetration is now up 21% from 16. That is very nice to see. Excuse me, got something stuck in my throat right there. So now moving on, number one brands across a couple countries in Europe. Digital consumption growth, 40% growth, 75% growth in Q2 of fiscal year 2024. So we are dropping in terms of the growth rates, but that's the law of large numbers, right? You can't grow at 75% forever, but still, for them to still be growing at 40, that's amazing. Digital penetration to the upside goes to show that their marketing efforts are, paying fruit right now. 5.3 million members, that is 30% growth on their beauty squad, which is their online community, stuff like that. Just a blowout, guys. And here they go over some of their best performing products, which they call holy grails and stuff like that. Number one unit share for their Power Grip Primer. I have no idea what that is. I don't use it myself. But you guys can go through these, and I think we get the gist of what's happening here, right? They're performing excessively well, hitting all their targeted sales mix channels online. In retailers are getting more shelf space. Walgreens, Target, and Walmart as well. So I mean, it's just a very solid company, guys. And I think that they've been crushed so much down here. Is there anything more down here? I don't think there's, are they down here? No, but essentially this is just a slide that I like presenting you guys, right? So here's the prices, $14 for this. I don't even know what this is. I think it's foundation or something like that. Anyway, so for $14 versus $49, the Prestige brand. This one, primer, $10 versus $38. This one, lip gloss, of course, $8 versus $40, which is what I said for Estee Lauder. And here you go with some bronzer, I assume, $12 versus the $38. So these are the prices that people want to pay. Couple this with some viral social media content, some good branding from some influencers, some very nice graphics, as you can see, right? Very alluring in terms of what they do in terms of marketing. So there you go. That's why they're completely crushing it and continuing on taking on market share and just executing their strategy very, very well. So ELF Beauty, where do we stand in terms of the future growth? Well, I'm glad you guys asked. So let's move on to the balance sheet. Balance sheet right now, not too bad. They didn't incur a decent amount of debt, but I wouldn't say it's an unmanageable level of debt, guys. This is a company that brings in over $1 billion of revenue, and they do bring in about, anywhere between $100 to $200 million in net income per year. So debt's not a problem for them. They have a little bit of cash on the balance sheet. Not that bad in terms of the balance sheet. It could be a little bit better, but no major red flags, guys, right? The company can access the capital markets in a very easy fashion. EPS growth, still very, very solid. And revenue growth as well for the next 4 years, extremely solid. All of the analyst price targets are currently above the current share price of the stock. So I will myself be looking, guys, to continuously build a position down here. I'm really, really, really looking forward to it, guys. I'm really looking forward to it a lot. So let me just see if I fix this. 351. It's off by a tiny little bit. So revenue growth, 22% per year. EPS growth, 19% per year. At $109, where they stand right now, where they were about 5-10 minutes ago, right? You're standing about $109. 31 forward PE and a 1.63 PEG. That's actually not too bad at all. Now, you would assume it's cheaper, but then again, over here, ELF was trading at a quite rich valuation. You might remember we were doing some analysis up here a few quarters ago, and they were like a 2.5, 2.8 PEG at that point. So now the valuation is a much more manageable. We've established a shelf of support. The fear level, right? Is the company going to lose customers? Are they going to lose market share? Are the consumers going to stop spending? The answers to all those questions are no. Are they going to be affected by the tariffs? Most likely not as well. So now we have a shelf of fear-based support, which is why I want to aggressively play the company down here. 110 at about $90. I'll be writing short puts all day. I will not mind being assigned, guys. Even for some longer duration calls, you know what I mean? Like, not a very bad proposition, not financial advice, of course, just a trade idea. But I would not be surprised, guys, if ELF Beauty can progressively make its way back towards the whole $130 to $150 range over maybe the next 3 to 6 month period. It can happen sooner, it can happen later, but I do think the outlook for this company is quite good, and they are arguably the best positioned in the cosmetic segment to navigate the current economic landscape, right? So everybody in this segment is getting crushed, but ELF is doing the best. It's a bit what we just talked about on CELH, right? Everybody there is getting crushed, but CELH is doing the best. So hopefully that analysis helps with ELF. Now, moving on to the company number 3, we're going to be covering ARM. Give me a very brief second. So moving into ARM right now, so we have a 2.87% increase on the day, but they gave it all back in the after hours, down about 5.41%. So the net change on the day is like what, 2.5%, guys? For all intents and purposes, they're at prices not seen in a very long time. Prices not seen since yesterday, essentially, right? So moving on in to the revenues and EPS of the company. In terms of the EPS and revenues, guys, they were fantastic. EPS beat by about 17% right there, and revenue did beat by about 4.19%. So why is the company down if they had a double beat, guys? Well, let's get into the article and we'll make sense of the matter. So ARM revenue and profit top expectations powered by iPhone sales. So if you guys don't know what ARM does, they're a big semiconductor player, but they do not manufacture any products. No. They are the design firm that designs the layouts for the tiny little semiconductor chips, right? And then they sell those designs to companies like Samsung, Intel, TSMC, and other manufacturers who do manufacture the chips. And here's the kicker. When they sell the blueprints, when they sell the plans of these chips, they collect royalties for the entire time that these chips are in circulation. So a very long time, a very sticky business model, a very capital light business model as well, extremely high gross profit margins. So let's get in and see what exactly this company is up to. Now, let's move on. Customers like Apple are using a more profitable version of the next generation technology of ARM Holdings called the V9. The company, however, forecast current quarter revenue with a midpoint that was merely in line with estimates. So here you go again, another company that beat on the current quarter, but because the guidance wasn't raised or extra fantastic and it came in line, the company's down 5%, right? So that's pretty much everything, guys. ARM forecast revenue for the current fiscal quarter, the one right now, moving forward, right? Of $945 million is the revenue. The analyst estimate, 944. So they came in above the analyst estimate, not good enough. Company's down 5% in the after hours. So it just goes to show, guys, it's all about the guidance, right? Now, in terms of fiscal third quarter EPS, they come in with an expectation of a 34 midpoint, and the analysts were there as well at 34 cents. So really in line with the guidance for the current quarter. This quarter is all about the validation of the strategies we've been talking about, said the CEO. ARM derives revenue from licensing fees for its chip designs and collects a royalty for each chip sold that uses its technology. The company is in the midst of introducing its V9 architecture, which is expected to generate higher royalty payments. ARM's designs power nearly every smartphone in the world, and it has attempted to make headway in data centers and other markets. It has developed a number of pre-built designs that enable customers to build chips more quickly and has doubled the number of pre-built design licenses this fiscal year. That is huge. The fact that they've doubled the amount of design licenses, and NVIDIA is one of their clients as well. ARM's second quarter revenue rose 5% year over year. The V9 technology represented 25% of ARM's revenue for the fiscal second quarter, and its adoption in smartphones assisted the company's revenue growth. Apple is one such customer, and its latest iPhone 16 series designs include the V9 tech. I did not know it included the V9 tech, but pretty nice to see. We're pretty optimistic about the growth rates for mobile, including Apple, said the CEO. Unlike prior versions of the designs, this is how they milk you. This was crazy when I read this. Unlike prior designs, the company has structured deals for the V9 technology to allow ARM to increase prices over time, and in some cases every year. The ability to hike prices on its new technology is crucial to the company's longer-term growth strategy. They're just milking it, guys, at this point. The chips based on the company's blueprints are included in NVIDIA's forthcoming Blackwell AI hardware. So there it is, ARM once again milking the market essentially for all it's worth. Let's have a look at some of the investor slides that I have prepared for you right here. So as you can see, ARM designs a number of things that go into a lot of other things. Mobile, cloud compute, think of NVIDIA, think of AWS chips as well. Automotive for full self-driving, the autonomous chips as well, and Internet of Things and embedded, those little Google Nest, little Apple homes, stuff like that, right? So they do a bunch of different things, but once again, they do not manufacture any products, which is why their profit margins are so ridiculously high. Now, moving on further, you can see that the ecosystems that they cater to are many, 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 and it's all the biggest players in the game, of course, right? Everybody uses ARM right now, the highest ever revenue for Q2, which is very good, off slightly in terms of the last 2 quarters, but once again, a cyclical business, right? Goes like this, but overall, it's an ascending. It looks like the S&P, right? Just goes up and down like that, but up over time. So very, very good. Not a fantastic performance, but good. Here's the royalty, as you can see, right? Here's the ARM v7, ARM v8, and ARM v9, light to dark. And you can see that all throughout, as they phase out the old products, they still collect revenues from royalties from all the older models as well. So as V9 takes more and more of the new share, and they're going at it with a more aggressive pricing strategy, I would expect their profitability to increase even more. Diversification in multiple long-term growth markets. Here was the company markup in 2016. You can see that they're well diversified right now, as opposed to 2016, right? Internet of Things is 20, automotive is 8, cloud and networking is 10, consumer electronics 15, mobile and smartphone. Smartphone used to represent a whale's share of the company's revenue mix before, right? Here we can see gaining share in a massive market. So market share 22 to 24, you can see that for the most part, they're gaining market share, guys, in every single market that they touch. Very solid performance from ARM right there. Look at their revenues to profit, guys. Look at these non-GAAP gross margins. Look at the gross margins. Here's your cost of goods sold. This is ridiculous. I think this is the company with the highest gross margins in the world. Not even lying, guys. Probably higher than Visa and MasterCard potentially. 97% non-GAAP gross margins. They spend a ton right here on research and development, of course, in terms of the operating expenses. And they spend an absolute ridiculous amount of money on shareholder compensation as well, or stock-based compensation rather, for management and executives. And that takes up a lion's share of their operating expenses. Now, their net revenue, guys, was very good this quarter. I'll just do the math because I wrote the number down somewhere, but I don't want to fool around and play with it too much. 37% net margins for the quarter, which is fantastic for ARM. If you take a look at their net profit margins, right? So here's their gross margins. They're back to 97%. Net margins for this quarter should be about 37. I'm not too sure if this website takes GAAP or non-GAAP numbers, but if you compare it right here with TradingView, you'll see that in the last couple of quarters, they're up to about 24, 23%. So I assume that TradingView is taking the non-GAAP. This quarter's non-GAAP, as we just derived, is 37%. So much better in terms of net margins right there. Fantastic for the company as well. We're just going to go through a few more slides, guys, and then we're done. I think we're actually done right away. That's really everything that I wanted to show you guys in terms of ARM. Other than there's one more. Annualized contract value going up higher and higher. More royalties, more contracts for the company. And in terms of remaining performance obligations, they usually run at about a 1-year run rate in terms of revenue outstanding. So they still have a lot of revenue coming in the pipeline over the next year. I wouldn't be too nervous about this company. Everybody relies on them. However, this is a case in point of a company that I really love the business, guys. I love the business. How can you go wrong? Excessively high margins. Arguably, they have a monopoly on what they do. Everybody uses them. Nobody really uses other players, and they keep gaining market share in every single thing they touch. So it is a company that respects my criteria that I look for in a high quality, high conviction company, right? They have a very large moat. It is very difficult for competitors to enter the business and disrupt this company's business model. They have very high pricing power. Since they are in that status, they can charge essentially what they want and people will still pay. And they collect royalties. It's a toll booth company that Warren Buffett talks about all the time. This is a company that I love a lot. But what I do not like, guys, is the stock price. We're going to get into that right now. So in terms of the forward growth, there's no problems here with forward growth for this company at all, right? As you can see, nice EPS ramp. As you can see, beautiful revenue ramp as well. But why are some of the analysts either at target or below with such a solid company? Well, it has to do with the valuation alone, guys. ARM is not a cheap company by any measure right there. They're growing revenue extremely nicely in EPS. These two numbers at face value, you will assume that the company is performing fantastically, which they are. However, the stock price, this is another case where even though a company is fantastic and I love it, the stock price is just kind of a little bit disconnected right now. Too much stock-based compensation, almost 20% of the revenue. That's my biggest red flag with this company. Other than that, everything else is perfect. At $138, where do we stand? We stand at a 86.25 price to earnings ratio, and the PEG ratio right now at 138 is a 2.7. Now, the one saving grace for this company is if they can control their costs, cut back on stock-based compensation, and really drive more of those juicy gross profit margins to the bottom line, guys. I mean, it's, they need to do more to drive more money to the bottom line to EPS, because that's the only way that this company is going to have a more favorable valuation is if they grow their EPS even faster, right? So 2.7 PEG ratio. That's very high, guys. Extremely high in my opinion. And price to sales is the highest in the entire semiconductor industry. It is a 37 price to sales. That is crazy. NVIDIA, for context, is a 28.5. So if everybody's complaining about NVIDIA being expensive, well, do not look at ARM. The ARM PEG ratio is higher than NVIDIA. Price to sales is higher than NVIDIA. This is the most expensive stock in the entire semiconductor industry right now. And it's not even really close. So for that reason, guys, I am out. I can't really start a position right here. I mean, I guess if you have a 10, 15 year long-term horizon, you're expecting the company to grow into its valuation, that's one thing. But for the short term, guys, I think there's better deals in the market right now. I would be tempted, however, to take a position maybe 125, 120. This is usually when I like playing the stock and play it more aggressively. So if I can get a dip down here, 120, 110, while the rest of semis are doing well, if this one has a little bit of a valuation crush, I would not mind playing it down here, but I won't be playing with an excessively large amount of size just because I'm not really a big fan of the valuation. So hopefully that makes sense for ARM. Gorgeous company, amazing company, but the problem right now is the valuation. It's not saying that they can't go up from here. Of course they can. But the risk to reward, in my opinion, guys, I think there's better companies on the market right now with more favorable risk to reward. And that is everything for our earnings recap. So hopefully you guys enjoyed that. I don't know how we're already 45 minutes through this video. I feel like I've been talking very fast, and I also feel like I've summarized the points that I wanted to go over. The election, my little statement on how we're feeling right now, our earnings. I don't know how, but anyways, let's not extend this any further. Let's go through the technical analysis, and then we'll be done, right? So in terms of the SPY up about 2.49%. Now we had this rising wedge, and the rising wedge did break bearish. And now we're back inside it. So we've invalidated this pattern as a whole. So we can just do away with it. We're back to normal technical analysis. No patterns that we have to watch out for. It broke. It did its thing. The bears lacked a little bit of follow through, and now we're back above. So in this point in time, daily downtrend is finished. Big move up by the bulls. At this point, any pullback, going to be looking for a new daily higher low for further trend continuation. Now that the daily trend is finished, I was telling you guys the most important thing of this daily downtrend was the weekly consolidation. I was telling you guys for the past couple of weeks, watch for the weekly higher lows for further trend continuation. And now if we close the weekly candle like this, we will most likely get that weekly trend continuation. Weekly higher lows are now set in stone down here, 568.12. So in the event that we give all of this back and set up a new daily downtrend, we are just going to be looking for a new weekly higher low for further trend continuation. Everything is looking very good. No red flags on the S&P just yet. Moving on to the QQQs. So the QQQs, 2.72% to the upside. Same analysis. They broke down from the rising wedge and they backtested it. No follow through by the bears. So they invalidated the pattern. We can now do away with the pattern and we're just back to normal price action. We were at worries of losing the daily uptrend into daily downtrend confirmation. And I was telling you guys, the whole time we're consolidating here, what are we looking for? We're looking for the weekly higher lows. Weekly higher lows are now set and we're on for a new weekly leg of uptrend. Almost coming close. Actually, you know what? I think we did set a new all-time high today, 503.52. And this one, 506.41. Yeah, new all-time high on the QQQs. Congratulations to the bulls today. New all-time highs, tons of space, guys, on a pullback because now we are obviously quite extended on the SPY and the QQQs in the short-term time frames. So in the event you get a pullback, hourly downtrend right there, and you get the daily pullback, well, just know the expectation, guys. Looking for a daily higher low for further trend continuation. I would be mindful if we do come back and fill this gap. Usually most gaps do get filled. So I would not be surprised if maybe with Jerome Powell tomorrow, we utilize a bit of that uncertainty and volatility, maybe over the next few days to just fill this gap and then go on to a next leg of rally. That would be the best case scenario in my humble opinion. So be mindful of these gaps. But as of now, the bulls are in absolute full control of the short-term time frames. Just watch for overbought conditions into a bit of a sell down. Suffice to say, guys, I'm waiting for a pullback. I made a ton of trades today. We made a ton of money today, but I'm still waiting for a little bit of a pullback. Now we have the confirmation, we have the blowout, we have the trend confirmation as well, waiting for the breakout, the retest, and the possible run. Moving on to the XLF. So XLF, guys, new all-time high, blasting past it, right? Not even daily overbought, but look at the short-term timeframes right here. Hourly is to the moon right now, right? So eventually we will lose this hourly time frame. And when we do, just understand it's going to be looking for a daily high or low. Anything above, 46 is just going to be looking for a daily high or low for further trend continuation. So at this point in time, we were in a daily downtrend. I was telling you guys what the context was. The context was the bulls never having lost the weekly uptrend. Weekly higher lows are now set. And now there it is, guys. Get another weekly leg of rally. I was telling you guys that my favorite company to buy in these locations over the last week or so was Berkshire. Started talking about it here, and most recently here after their earnings, citing the fact that it was a very interesting company and that I was in. So if you guys had also been in with me, we are now looking quite pretty on Berkshire. I digress. In the event we do pull back, once again, looking for a daily high or low. We'll keep a close eye on this one. Still, Berkshire is my top pick for that industry. Healthcare, XLV, up 0.13%, but you guys can see they gave back a lot more than that. They were up over 2% today before giving it all back. So suffice to say, unfortunately, guys, very tough to derive short-term price action from here. You can kind of just forget that it happened, right? It was supposed to be an hourly uptrend. It's just a very volatile event. So let's act as if it never happened, right? The bulls are still trying to go for the hourly uptrend, but in the event we break 147 to the downside, that will be an hourly confirmed downtrend, and we will perhaps, revisit some of these lows. The bulls do have the daily uptrends right now, so they need to protect 146. Stay above 146, you're looking good for some daily trend continuation, but break down below, and unfortunately we continue the weekly downtrend. So we'll keep a very close watch on healthcare. It's been out of favor now for a very long time, and unfortunately, my favorite company has now ran away from me. I wanted UNH down here in the 550s. They almost gave it to me. I was waiting for the election uncertainty, and unfortunately, we just missed it by roughly, $10, $15 down here. That's okay. Tons of trades to be had, guys. Never feel FOMO. Never feel you missed out. There's so many stocks in the market, guys. And there's tons of good ones, as good, if not better than UNH. So I'm not too upset about that one. But healthcare has their work cut out for them. We are still looking for a daily rally into a weekly engulfing move to reset the weekly uptrend. Support is still solid right here. 148 down about 145. Moving on to SMH. So SMH today up about 2.62%. Not looking too bad at all, right? So SMH moving quite nicely, but still trapped in resistance. 260 down about 250. But one thing that today did ignite is the whole growth trade. So I would not be surprised if this one continues to get more bullish momentum. We had ARM earnings, which now are in positive territory. Well, they were in positive territory, now we're down. But we also had the one that I want to bring up, was Qualcomm. Qualcomm, big semiconductor player. They came out with their earnings in the after hours. We'll cover them at a later date. But as an aggregate, up over 10% on the day. So renewed semiconductor bullishness for the whole sector. I would not be surprised if tomorrow is a nice green day for the sector as well. So still moving into resistance, but the bulls are looking decent, guys. At this point, we're trying to get the daily uptrend back. So in the event we cannot break this in one clean shot, we'll be looking for the two-step process, right? Recover a little bit below, anything above 240, looking for the daily higher low, and then going for the trend change. That is if we don't just completely V-shape it into tomorrow, so keep that on the watch. In terms of the weekly, well, we were always looking for the weekly higher lows. Weekly higher lows right now, even though we don't have the daily uptrend confirmed back, we can kind of speculate that the weekly higher lows are set down here at about 241, and we may just be looking for a weekly leg of expansion beyond to the all-time highs, provided that most of all the names in semiconductors remain bullish through the end of the week. Now, the Russell, guys. The Russell, well, this is what the Russell was waiting for, right? A big catalyst that signals that the economy is back into, or rather, estimating that it's going into a big boom growth phase, right? Tomorrow we will hear from Jerome Powell and his comments on the direction of things. But of course, today's move is just predicated on what President Trump is running on currently, right? Lower corporate taxes. He wants to drive inflation down. He wants to drive interest rates down, and he wants to grow out of the inflation cycle. He wants to grow out of the fiscal deficit that they're in as well. It's all about economic growth and just letting the economy expand, without hindering it back too much with too many regulations, right? So obviously when you tell that to the markets, it becomes a risk-on environment. And at this point in time, there's no other better risk-on trade than two things: crypto, and of course the small cap sector. So the small cap sector did something big today, guys. Daily close, right? Daily close, this was a big one. We closed the candle above, and if we close the weekly above here, we will have closed above our 2020 and 2021 resistance zone. You remember this whole time, the last 2 months, I was telling you guys, for the Russell to break above here, we're going to need to get a massive green light for the economy. We just got it today. Last week was like kind of a preliminary green light to where the data wasn't bad, but there's still some bears on the sidelines, right? There's still some people saying the numbers are fake. We might be possibly due for a recession. And that is somewhat valid too. I am also not 100% bullish right now. I would say I'm 70% bullish, 30% bearish. I'm playing the market for what they are. I'm following the money and making a decent amount of money in the process. But to tell you guys that I'm 100% bullish right now would be flat out a lie. There is still a bear thesis here, not only for the economy, but also for some of Trump's policies, right? It's not all as rosy as the market is potentially portraying it to be after today's price action. So we'll keep an eye on this, but they broke a very key level, guys. At this point, if they can close the weekly here, I'm not going to turn it green right away. It will be newfound support. As of right now, it will be support for the next coming days. Need to hold it. If we get a pullback here, guys, looking for a daily higher low, daily bulls now full in control, daily uptrend, looking for the daily higher low for possible further trend continuation. I will be looking for the retest trade, guys. I will most likely be using TNA, which is the 3 times leverage version of this, but this is the confirmation I was looking for. Breakout, retest, perfect. Now we have a well-defined trend. Weekly, breakout, and now possible retest. Great. Now we have a well-defined trend. We are well above a current level. It's much better than playing it here, where you're in the middle of between resistance and support, and you have an unclear economic and presidential landscape ahead of you, right? For those of you that positioned prior, you know, it was a lottery gamble. I would tend to argue that if Kamala Harris would have won the election, this chart perhaps would have been to the downside because Kamala Harris was running on corporate tax raises, right? And letting the economy, letting the Fed do its job and not too much having any direct impact in financial markets and whatnot, right? We know that Trump is much more hands-on. He wants to fix and tweak the economy as he wants to. The Democrats kind of let the institutions that are in charge of that, such as the Federal Reserve, it's many different institutions, right? They kind of just let them do it on autopilot type of thing without so much intervention from Biden himself, unless it's something like the CHIPS Act or, infrastructure bills and stuff like that, right? So moving on to the Dow Jones right now. Dow Jones 3.57% to the upside, looking very strong, guys, but the Dow Jones was never looking weak, right? Even though we had a daily downtrend right there, I was telling you guys the context of the daily downtrend was always looking out for a weekly higher low for further trend continuation. And look, they did not lose the 12 EMA, and I was telling you guys, worst come to worst, we'll probably test the 26, but they haven't lost the 26 this entire time that we've been in this almost 2 years worth of rally at this point, right? So moving on, new weekly uptrend is confirmed. New daily move higher is confirmed as well. At this point, any move lower, just gonna be looking for a higher low for possible further trend continuation. So the Dow Jones is looking very good, and they will be integrating NVIDIA into themselves on the Friday after the close and removing Intel, of course. Now, something has to be said about yields as well. So yields, guys, are just skyrocketing right now, which is why I pivoted away from yields. Now, obviously, there's so many things in this trade, guys. There's demand for foreign bonds from foreign governments and institutions alike. There's the bond vigilantes, speculative traders that have bid this one up to the moon. There is potential worries that Trump's tariffs will cause inflation, which will cause the Federal Reserve to put a pause on interest rate cuts and stuff like that. Guys, there's so many moving parts to this trade, right? The best thing we can do is understand what the trend is right now. Yes, we have the monthly downtrend, but the bulls have gained back way too much of this move for my favor. We've lost all the major levels, guys. We did not reject that resistance. We're now above it. It'll now be support. We rejected from this downtrending trend line as well. We are now above it, and the weekly bulls have just completely engulfed the move. So before I see a long-standing weekly downtrend and a notable shift in the direction of the yields, guys, I'm not going to try to pick the tops on yields anymore. They can go to 5% and stay between 5 and 4.7 for months and months and months and months, guys. This is the long end of the curve. This is not affected by the Federal Reserve. Stands to argue that, after a percentage point of rate cuts or more, these will come down a little bit. But the ones the Federal Reserve impacts are the 3, the 6 month, the 1 year, the 2 year, etc. The short-term yields are going to be affected by short-term interest rate policies by the Fed. The longer term yields, guys, This is the free market. This is the supply and demand of yields for US treasuries, right? Very, very simple. If nobody wants to buy the bonds, then yields are going to continue going higher and bonds are going to continue to go lower, right? It's just very simple economics, supply and demand for US debt, long-term US debt, measured by the yields that you have right here. Eventually, we will hit a yield that is attractive for foreign companies, foreign governments, and institutions at home and abroad to start buying this long-term debt. When yields on the 20-year hit 5% and there's some uncertainty in the market, people will want to lock in 5% for 20 years. Right now, equities are absolutely mooning. So there's not that much risk to equities right now. So nobody is buying any bonds right now. Simple, perfect. So let's move on from the yield trade right now. I'll be spending less and less time on that one until I see some notable shifts. Now, moving on to Bitcoin. Bitcoin, we have to talk about Bitcoin, of course, because this was one of our expected scenarios. If Trump was going to win, well, we knew that the bulls still had a chance at continuing in the daily uptrend. And that's exactly what they did in a beautiful fashion. Daily uptrend is confirmed. This candle closes in about an hour and 15 minutes, so we're almost there. And the weekly was always, the context of the weekly was always gorgeous. First confirmed weekly uptrend, guys, in the last 6 months of worth of time. I was telling you guys to pay attention to this one. New weekly upswing in motion right now. So the entire focus is going to be on the daily. Is it a good proposition to buy Bitcoin beyond the all-time highs when the hourly RSI is a little bit high right now, when the 4-hour RSI is a little bit high? You know, probably not, but I can't fault you, especially if you have a longer term thesis. I also have a longer term thesis. I think that Bitcoin by the end of 2025 is going to be anywhere between 100 and 125,000. So obviously at 75K, it is still a decent deal. However, if we want to be the best possible technical traders on this, I will be partial to waiting for a little bit of pullback. Now, the drawback is the pullback may not come before we reach 80, then we might only pull back to 75 and then launch, right? So the best possible trade entry right now is using your prior resistance, which is now going to be support, to act as a defined and clear level for some re-entry trades on the event of any pullback. Should be looking quite good. Ethereum is also coming up quite nicely. This one is trailing Bitcoin by a wide margin. That's just because Bitcoin dominance is through the roof right now. But you guys know how the pour into altcoin, the trickle down effect from Bitcoin works towards altcoins, right? Bitcoin makes the massive move first, and then when it consolidates, usually the rest of everything comes alive. So that's what I'm doing right now, is I'm rotating a little bit of my Bitcoin gains into some Ethereum, into some Solana as well. Hopefully that makes sense. Moving on to our big tech names right now. Can't believe this video was already an hour long. We'll wrap it up. We'll try to do these in about 10 minutes. Sorry about that, guys. Now, moving into Apple. So Apple down about 0.33%. Apple not getting a tremendous amount of love today, but we know that the context has been a daily downtrend. Overhead resistance, they tapped into it today, 230 down to about 225. And now the bears are possibly looking, if the S&P and the QQQs have a little bit of a pullback day tomorrow into Powell, I would not be surprised if Apple starts testing this support area below us, 219 down to 215. We are already into a little bit of weekly consolidation. We have lost the weekly uptrend, right? No more weekly uptrend. Back into weekly consolidation. I think we're going to get stuck and trapped, guys, between roughly 230 and roughly 215. I would not be surprised if we just oscillate around here. Apple is not really giving itself many reasons to march beyond the all-time highs right now. The growth is not there. There's still a little bit of concerns. The valuation is quite high. I would not be surprised if Apple embarks on one of its long-standing consolidation phases as it kind of grows into its new valuation and tries to appease some of the fears around the low revenue growth run rate, right? So my sell for Apple particularly, I don't think that it's the best swing trade in the market right now. Even if it is at support, I think there's much better names or much better valuations that you could be more confident in getting a massive rally off of a support zone than Apple right now. I would only be interested in Apple in the event I can find it between 210 and 200 to write some short puts. Anything above that, guys, is a little bit too rich for me. Long-term investment, I see no problem with the company. I still hold all of my long-term Apple shares. It's just that I'm not adding any up here. I'm not selling any. I'm just holding the ones that I have. Moving on to AMD, give me another brief moment. AMD, guys, I'm not going to jinx it, right? I don't want to say anything bullish about the company because when you start getting bullish on AMD, it tends to get scared, right? And we just flush. So AMD finally getting an hourly uptrend in motion. I was telling you guys, when you're going to be looking for the bottom of the daily, look for the shift in the hourly uptrend. Now, today, we got the confirmation of the hourly uptrend, should be moving forward. Now, step number 2 is, since we've reacted from the lower support area, how high can the bulls get in relation to this? Because we know we lost the entire daily uptrend, and the weekly uptrend is also in jeopardy right now. So we're looking for the daily bottom. How do you know that the bulls have a good chance of doing something like this? It is all in the size of the bounce. So as long as we maintain this hourly uptrend, will be your guide. As long as we maintain the hourly uptrend, of course, the daily bounce continues. Now, depending how high we get, that is the true key to this analysis. If we can make our way back to 154, which is the bottom end of our resistance line as well, if we can make it up to the 50% retracement, the bulls have created a lot of space. They can set up for the two-step daily uptrend recovery process and get this weekly uptrend back in motion. So that's going to be what we're looking out for. The weekly is still in the bulls' grasp right now. They haven't lost the lows. They do still have a chance, but it's not looking the best, right? The V-shape is going to be hard. In my opinion, maybe more the two-step recovery process is more likely. So at this point, overhead resistance is about the 155. I like AMD and I still like playing it for some short puts, mid to low 130s. Moving on to Amazon right now. Amazon, guys, finally breaking above the $200 mark, 3.8% to the upside. Looking fantastic on this company. I think that Amazon through 2025, I think they have no problem hitting the $250 to $300 mark. I know it's a lofty target, but Amazon is going to focus on efficiency this year, guys. So now we've broken above a key level, and the daily uptrend was never in jeopardy. They had it since after earnings. So at this point, any move lower, going to be looking for a higher low for further trend continuation. Where can the higher low come? Well, right at the prior all-time high. So something like this, retest and run. I'll be looking at the 200s, guys, to possibly add some short puts, and I'm probably going to buy some leaps. I was waiting for after the election to have a little bit more consolidation maybe on Amazon, buy it down here. Didn't get it, so I think I'm just going to fire off the leaps on Amazon right away. You might remember earlier on in the year, we had some leaps a few different times on Amazon. We closed them, but now I'll be looking to get back in. I was looking for this, a clearly defined trend and getting through the 200, right? So Amazon will be looking for the retest for some possible leap contract options and looking to play some short puts aggressively below that mark. On the weekly is looking gorgeous at this point. Beautiful weekly uptrend and a new breakout of the all-time high. So much space, even if we lose the daily, guys. Lose the daily doesn't matter. We have so much space on the weekly at this point. Anything above 182, looking for a weekly higher low for further trend continuation. Moving on to Google right now. Google finally getting the love it deserves, up 4%. Nice. Now, daily uptrend has been maintained, higher low is set, and looking for the expansion of the daily uptrend at this current time. Using this prior area nicely, I am on the verge of turning this one green. If we close this weekly candle above, this now becomes an area of defined support in the future on a weekly time basis, right? We did not lose it on daily consolidation. Higher lows are set, looking for the continuation of the uptrend, so looking good. Even on the weekly, guys, looking very good on Google as well. So Google is one that I will maintain my position in terms of a leap. In the event we consolidate a little bit more, as I told you guys yesterday, I'll be playing it very aggressively in the lower 170s. I love the valuation down here. I think Google in 2025 is going to be between a $200 to $225 stock. There's still a lot of appreciation on this one, in my opinion, right? I'm just a guy on YouTube. Don't take my word for it, right? But that is how we're looking for on Google right now. Looking good. Look at this MACD. I think Google is going to fly very shortly, guys. So I want to accumulate the most amount of Google positions that I can in these lower areas before we really start rallying. I was waiting for most of the uncertainty catalysts to be out of the way. Now that they're out of the way, should be able to put on some very nice trades for the end of November into December. I mean, we're not even up that much, right? Moving on to Meta. Meta down about 0.07%. Why did Meta not rally as much as the rest? Well, because Mark Zuckerberg's and Donald Trump have had some choice words for each other in the past. Obviously, there was a lot of, well, Mark Zuckerberg came out and said it himself. It's not tinfoil. I'm not giving you guys a conspiracy at this point, right? Mark Zuckerberg literally apologized to Congress earlier this year for censoring certain narratives during 2020, during Donald Trump's political campaigns in terms of vaccine mandates, in terms of other things like that, of course, right? So Donald Trump and Mark Zuckerberg have butted heads a few times, right? So, there was some speculation obviously today of whether or not Donald Trump was going to crack down on Meta's social media platforms. Obviously, it's not in his best interest to do that right now because he's running against censorship. So it would be very hypocritical of him to crack down on Facebook, just because he is now elected for a second term. That being said, that's the reason why this one didn't get as much love as the rest of the market today, right? Fairly logical trade. Now, in terms of where we stand, the daily is very choppy right now, we did put in a lower low, right? So daily downtrend, we recaptured it. I'll give this one to the bulls. We maintain the 50 EMA. Essentially what we're looking for, guys, is an engulfing move, right? Give me enough space to reset into a daily uptrend, because what we're looking out for now is looking for the bottoming out process. Look how clean it looks on the weekly. The daily kind of looks weird. Kind of looks a bit weird with the earnings move, right? But the weekly is very, very clear. Looking for a weekly higher low for possible further trend continuation. I think this one is almost ready right now, guys. I don't know if we're going to pull back into my desired area, the 540 to 535, for a pure retest of the level and then run. We might just run from the 12 EMA. So it is looking good for a breakout, retest, and continuation. It's been 4 weeks of consolidation. And I think the bulls are getting a little bit antsy, right? They're starting to do it. I would not be surprised, especially with Meta before earnings up at 600 already. Would not be surprised if they start regaining the levels over the next few weeks as they embark on this expansion through November and December, which are usually pretty good months for Meta because of the advertising ramp into Q4 by many different companies, right? Moving into Microsoft. Microsoft finally getting a lot of love today, 2.12% to the upside, looking very good. So 420.18. Looking pretty good. Microsoft has been trying to recapture a lot of their earnings move. So obviously we have lost the daily uptrend right now, and now we have to get it back. So once again, now we control the hourly time frame. I always tell you guys, if you want to see when the bottom of the daily is, look for the hourly uptrend. Now we have the hourly uptrend, so we measure the size of the move. And now, as you can see, we are already, we are almost 50% of the way. If we can get a little bit higher, 426, it'll be a 618 retracement. The bulls have a lot of space for the two-step recovery process. Here, they did it in one clean shot. I'm not saying that Microsoft cannot do it, but worst comes to worst, they have a lot of space right now to possibly do the two-step daily uptrend recovery. So it's looking very good. I was telling you guys indirectly, because I can't tell you guys to buy anything. It's not financial advice anyways, but I was telling you guys that I was buying a lot of Microsoft down here, playing it aggressively, bought leaps back here, call debit spreads. I was saying that down here was an even juicier level. So for all of you guys that have got into Microsoft, you should be up nicely right now. So congratulations. In terms of the weekly, we're still really oscillating between these two levels. I wouldn't say there's any clear direction until we close a nice weekly candle above the 435 resistance. At that point, the weekly uptrend will be clearly defined. As of right now, though, if they give it all back and round trip this, the support level still stays put, guys, at 405 down to about 390. I was waiting for an extra leap contract in the event we came back down here. Not going to get it. So at this point in time, I will continue to play Microsoft short puts aggressively around 410. And if we dip back down below 410, 405 in the next few days, that is where I may throw in my additional leap on the company, probably for a year and a half's worth of time, 80 deltas, of course. So, about Netflix, moving into Netflix, 2.13%. We were saying that Netflix was doing a good job of consolidating while the rest of the market was super nervous, putting in big moves. Netflix was doing nothing. Consolidation, bulls in full control. So now the daily uptrend simply just continues at this point. Any single move down, looking for a daily higher low, anything above 744. So a lot of space for the bulls right now. Where are we going? We're going to $800 psychological level. Looking very good. Nothing to see there. Very nice and smooth chart for Netflix, right? And now we have the clearly defined weekly higher lows into the weekly uptrend. So at this point, the bulls are in full control of this chart. A little bit too extended for me to take some swing trades at this position. I was looking for a pullback right here. Didn't get it. So I guess, unfortunately for me, I can't buy Netflix. I unfortunately have to buy such great companies like Microsoft, Meta, Google on pullbacks, Amazon on pullbacks as well. So I guess you win some, you lose some, right? I have Netflix shares in my long-term portfolio, so I'm not complaining at all. But for me, no real short-term swing trade right now, unless you're really bullish and you want to aggressively play the breakout continuation, of course. Moving into NVIDIA right now. So NVIDIA up about 4%, looking very good for them. Very nice right now. So clear break. We knew we had the daily downtrend. And I was saying with yesterday's move, they have a chance at going for the blue sky breakout, which they did. New all-time highs for NVIDIA right now, guys. 150 is going to be the psychological area of resistance at this point. So at this point, any move lower, guys, looking for a daily higher low, anything above 132, looking for the daily higher low. And on any pullback, I will be writing NVIDIA puts aggressively in the 130 range. I think their earnings in 2 weeks will be fantastic. Big tech basically telegraphed the pass, right? They gave away the secret sauce. They said that not only are they continuously spending on CapEx this quarter to ramp up their data center activities, but into 2025 as well, they'll be spending even more money. So NVIDIA, probably no problems for growth, at least over the next year, which is why I'll be aggressively trailing the company with some short puts down there. In terms of the weekly looking very good, looking for another weekly higher low for a continuation of the weekly uptrend. So weekly higher lows at this point are set in stone, I would say, at about 132. So I would not be surprised if NVIDIA really moves forward to the 150 mark in the next week and a half of trading. So congratulations to all NVIDIA bulls out there. You guys must be having a heck of a nice time. Now, moving into Tesla. Tesla, the biggest winner of the day of all the Mag 7 names, for a very clear-cut reason, right? Obviously, Elon Musk has been a very firm supporter of Donald Trump in the last month and a half, to say the least. So, of course, maybe his companies stand to benefit the most from that close association with Donald Trump, right? He's probably going to be one of Donald Trump's close advisors. And we know that Donald Trump hasn't been very vocal about renewable energy, clean energy, which is an area that Elon Musk has a lot of expertise in. So hopefully Elon Musk is able to sway Donald Trump's opinions on renewable energy, and hopefully it does get a lot of investment into the sector, which will be good for Tesla. In my opinion, that is the one reason why Tesla is up today, and a lot of other solar and renewable energy plays are down, just because of that closer association with Donald Trump, of course, right? Fairly logical move by Tesla, all things considered. Now, moving on further, we have now crushed the 265, 270 area of resistance, looking very good. Daily bulls are in full control at this point. And the next area, guys, is, of course, the ever so elusive 300 psychological, right? This guy right about there. So in the event we do pull back from these highs after today, glorious move. We have a ton of space, guys, right? Anything at this point above 239, going to be looking for a daily higher low for further trend continuation. If we do pull back here, could be good for a little bit of a swing trade on Tesla, guys. Maybe with some call options, some call debit spreads. Wouldn't be opposed to playing a retest of the 270s, 265s, maybe all the way up to the 300 target. Could be a somewhat interesting trade. So I'm going to be waiting for the pullback. If you're in right now, you can probably have a good opportunity to maybe even hold for the 300 close coming up in the next 2 days. We'll see how this one goes, but the bulls are in full control of this chart right now. Tesla is looking very good. Look at this weekly, guys. Glorious, glorious, glorious weekly move to the upside. Weekly uptrend just continues in motion right now with the bulls in full control. We will see if they can close this candle right there. It's going to be extremely bullish, leading into that $300 level. And as I was saying, guys, after their earnings, I'm pretty sure that the worst for Tesla is now behind us, and that blue skies await. Are they going to stimulate demand instantly with interest rates still high? No. But then again, guys, I think that the worst is behind us for this company right now. Moving into Palantir. So Palantir up another 8.61%, guys. Since their earnings, this company is now up another 33%. Absolutely monster move by Palantir, guys. At this point in time, very tough to chase this one, of course, guys. It is a very risky trade. It can continue to make money, but you guys know how this works, right? There's more risk and less reward the further and further this chart moves vertically in that direction. So we'll be looking eventually for a daily higher low for possible further trend continuation. So much space, anything above 41, looking for that higher low. Keep an eye on the hourly time frame, guys. As long as the bulls do not lose the hourly time frame, we are not going to lose this. The reason that this one is running so hard, institutional ownership of Palantir is low. This is all retail for the most part. Look at this massive volume in the last 2 days. So eventually we will be looking for a pullback, and we will gauge the size of the pullback to determine whether or not it's just a short daily pullback for continuation, or whether or not it's going to translate into more of a deeper weekly pullback on the stock. But this one is gone. Gone, guys. Home run for Palantir bulls. Congratulations to all shareholders out there. Still not a bad idea to maybe take some off the table, trim a little bit, covered calls with a little bit of time, guys. Never a bad proposition. At least take some profits. If you're a long-term investment, 5-10 years, no reason to sell right now at all. Companies should be expanding fairly well. And that is everything that we had for our stock market recap, the election recap, and everything in between. Hopefully you did enjoy the videos. No portfolio recap today, although I did make a ton of juicy trades. I will be recapping everything on Friday. Usually that's how it works on the channel. I give you guys updates Monday and Tuesday for the week with the trades, tell you guys how I'll be positioning for Wednesday and Thursday. Then I do my own stuff. And then on Friday, we do a full recap, right? However, in the event that you do want all of my trades in real time for every single day of the week, guys, well, just keep in mind that we do have the private Discord for that exact reason. If you want access to all of these trades, this is the last week's trades recaps. This week's is currently not there, but we've made a lot of money this week, guys. It's been a very good week. So if you want all of these trades on a daily basis, the private morning live streams as well, all of my calls, whether it's the short put wheel strategy, the longer dated wheel strategy, shares and call options, leap calls as well. Ask me questions in all of our chat rooms all throughout the day on your stocks and your options plays. with the private morning live streams as well. Feel free to click the link in the Discord down below. And if not, we'll all see you back on the channel, guys. Consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. Would love to have you back here. And lastly, if you have any questions, especially after a day like today, please feel free to leave them down below in the comment section, and I will do my best to answer everything tonight. So take care, guys. Have fun tomorrow. Big day. Jerome Powell will be speaking at this point in time at obviously the 3 p.m. session tomorrow. So looking forward to that. And after that, we're done. No more volatility catalysts for at least the next few weeks. So should be smooth sailing. Maybe we get a little bit of a consolidation profit-taking pullback, but I think we should have fairly smooth sailing thereafter. So take care, guys. All the best. Hope you guys have crushed it in your trades today. Take care. Love you. See you tomorrow, and peace.